Coming to you from the floor of the CME Group, I'm Eric Wolfman Wilkinson. It's Tuesday, February 21st. After the long weekend, hope everybody had a great President's Day. Back in the saddle again, and what do we have over the weekend? This Greek tragedy. It's an epic tale that just keeps going on and on. But what did they finally do? They finally came up with something that they could present to the European Union, Germany, France, to see if they can get this second tranche of bailout money. Well, it looks like they have. Well, with a couple caveats, the bondholders have to take about a 53.5% haircut, a little bit more than what they expected, but not as much as some people anticipated. And on top of it, they have to have these investors agree to it. If they disagree to the haircut, this might not go through. They might not get their $173 billion in bailout. So Greece still has a little bit of work to do, but it looks like everything's going along the right track. In the meantime, all of this has caused the equity markets to kind of spike up. S&P's jumped up to that level I've been talking about, 1363. It's been a while for it to happen, but it finally has come to fruition. We've traded up to, I think it's 1369 was the high. We're basically playing back and forth with this 1363 level. That's going to be the major support resistance area. Anything above that, 1382 is the next stop I've got. 1370 looks like a little bit of a mild one, but 1382 is the next target. I don't really see anything happening, without any economic data coming out today. This Greek tragedy coming through is kind of giving us a little bit of lift, but there's still a little bit of doubt in some of the investors' minds as whether or not they're actually going to have the investors sign off on this. All right. In the corn we saw it on Friday spike up into that 1640 area that I've been talking about. Sure enough, it trails right back down to the pivot, 635. 635 is just that major magnet. Anything below that, 611 is the next support I've got. I really think technically it looks like it's going to go down to test that 611 before we head into March. So basically the next week and a half, I think you're going to really see that downward side tested. I don't have a whole lot today. The Greek tragedy, I mean, it's going to keep playing out until somebody actually comes down and nails this thing out, gets the investors behind it. But anything other than that, the bonds are still holding tight, just waiting to see if this doesn't come through. You'd think with all this equity rally, bonds would start selling off. We'd start seeing the yields start to rise, but really we're kind of hunkered down right at these areas. 10 years sitting there right around the 2%, bonds still right around the 3%. So they're holding tight right at those levels. And one other thing, if you can't take that, take it easy. Coffee's learned to duck now.